Hello and welcome back to the channel. Today we're tackling a question that's on many people's minds. Is the housing market about to crash? Well, we're going to look at the data and try to find the truth about today's housing market. So let's go. With recent fluctuations in housing prices and market mortgage rates, it may be natural to question whether a housing crash is coming. But according to the experts, there's very little chance of a market crash in housing, and we're going to explore an article from Bankrate.com where they interviewed several experts to find out their opinion on where the market is and where the market's probably going to go. According to housing economists, several factors contribute to a relatively stable market right now. Number one, homeowners have generally stronger financial profiles due to changes that occurred after the last housing crisis in 2008. Secondarily, homeowners have built up quite a bit of equity because homes have been owned longer generally than they have in past markets. And third, many homeowners today have historically low rates that they locked in during the period of the pandemic. And due to those factors, there are 5 reasons why a housing market crash is not anticipated by economists. So referring to the article at Bankrate.com, which will be linked in the description below, 5 reasons there'll be no housing market based on those 3 factors. Number 1 is inventories are still too low. A balanced market has a 5 or 6 month supply, meaning it's balanced between buyer and seller, no advantage. But the National Association of Realtor points out there's only a 3.5 month supply of homes in February. Now, this is local too, so in the Northeast you might have a smaller month of supply, where in Phoenix we're about 3 months supply. There's a lot of listings but fewer buyers. You'd think that prices would come down, but when you look at the listings in Phoenix, for instance, where we have 25,000 but we only sell 8,000 homes, those 25,000 homes are still not enough for the number of people we have looking for homes. Builders are not building quickly enough to meet demand. So we still have, 5 million home shortage in the United States. And this can be impacted also locally if you have a lot of regulations. For instance, in Arizona, we have a 100-year water requirement for new construction that has to be met before they can build. In other places like California or Washington State, they have other environmental reasons that would limit the amount that builders can build and really raise the cost for builders. The third reason is that demographic trends are creating new buyers every year. It used to be that when you reached the age of 33 on average, you would be a home buyer. You'd be entering the market. Well, that's slowed down over the last few years because of the interest rates, but millennials have been surpassed by boomers as the biggest buying group right now. But as soon as rates come down, the millennials, they're going to take over that title once again. The fourth is, of course, lending standards remain strict. This is the aftermath of the 2005 to 2008 housing crisis, where lenders have much tougher standards nowadays, and you have to have excellent credit to get into a home. So now, even if you want a home, if you don't have a very good credit score, you may be out of luck, except perhaps if you're a first-time home buyer, you use FHA. They have lower requirements for an FHA loan. And the fifth reason we don't think we'll see a crash is foreclosure activity is low. After the housing crash in 2008, we saw lots of foreclosures on homes. The values of the homes were far lower than the price they paid for the home. And as we had some recessionary pressures come into the marketplace, people just couldn't afford those homes any longer. And so we had a lot of short sales during that period. But right now, foreclosures are actually pretty low. So even if we imagine we have a recession, it doesn't mean home prices are going to drop. What does drop after a recession historically are mortgage interest rates. And that sometimes causes home prices to go up. As mortgage interest rates go down, more people go into the market, there's more competition, causes housing prices to go up. So we still have the challenges of high home prices and higher than preferred mortgage rates, which are driving unaffordability. So what does this mean for you? Well, if you're considering buying a home, pre-position yourself to be in the position to make the move when rates drop, before the big rush of people into the marketplace. Know your financial situation well. Lenders can provide you a pre-qualification to see what size home, the amount that you can afford right now on your current budget. And if interest rates drop, that amount will necessarily go up because you'll have more freedom in what you can afford. And I say this in many of my videos. Take the time to go out and find a lender. I have 2 that I can refer to you. Great people. They can tell you exactly where you're sitting right now today, and their pre-qualifications are good for about 90 days on generally. They'll tell you what kind of loans are best for you given your particular situation, what benefits you can get out of either FHA or conventional or VA loan, or if you're out in the rural area, USDA loans are also very attractive. And keep in mind that real estate is very local. So you have to know the market that you're in, and so periodically I will post about the Phoenix market to let you know if you're looking to move to Phoenix, or if you're in Phoenix and you are looking for a home, finally trying to build that home equity, that generational wealth, trying to be an owner rather than a renter. You can get some good insights on the market changes and the market updates that I provide at least once a month on this channel. So if you want to know more, always like, subscribe, set the notification bell so you'll know when I'm posting, and if it's something you're interested in, watch it all the way through to the end. Get all the information first. Be an informed consumer. Don't go on what's rumored in the marketplace. So if you enjoyed any of this, if you learned anything from it, if this is informative and helpful for you, please like, subscribe, share this to someone else who might be looking for homes. I know there are many of you out there, people just waiting, champing at the bit to get into the marketplace. And I'll see you next time.